Hi guys, today is October 8th, 2020, and futures pointing to a higher open, and we've been trading up and down in the last couple of days on President Trump's tweets about the first shutting down the negotiations with House Democrats on a new package that could help the American economy, and then he also tweeted that he could do a peace deal, like helping airlines and small businesses and sending out checks, and that lifted the markets yesterday. Lifted the markets a lot yesterday, actually. So, and actually, besides that, there were news about the vaccine on Eli Lilly and Regeneron, and the good news about that. And today, unemployment claims, weekly unemployment claims came in. There were 840,000 versus 825,000 expected, so a worse number. And so futures were higher this morning, but the worst number from the unemployment claims took the wind out of the futures, and they're still higher, but not as much. So let's jump to SPY, ETF for S&P 500, and SPY is chugging higher, but not in a straight line. I mean, to me, it's going higher, but it's going to be a choppy trading, and I don't expect it to go like a straight line up. And a lot of stocks are in overbought territories, and I will be careful with many of those stocks. And they're at the 52-week high and all-time high. So I will be careful with some of those stocks that are seeing new heights and trading at unforeseen territories. Okay, so let's jump to stocks, and before we do that, and if you want to see my trades on a pretty much everyday basis or my portfolio, you can check out the Patreon link in the description. Okay, so let's start with Apple. Okay, so Apple's trading higher was a news recently that Apple has stopped selling wireless speakers from other companies ahead of its own product launches, and company products like Bose speakers, Sonos, and Logitech are absent from Apple stores. So stocks like SONO, okay, and LOGI, they were tanking recently on these news, so I would leave those stocks alone, and I would wait for them to come down a little bit more, and before and after the event, the Apple event, maybe you could pick this up, because I expect. I mean, they will come out with the speakers, but it's not going to be. It's not going to be as bad for these companies as people expect. So let these stocks come down a little bit more and then pick them up. Okay. Next company is let's jump to vaccines company. Okay, PFE and BioNTech. These two companies, European regulators have begun rolling review of the COVID-19 vaccine candidate being developed by Pfizer and BioNTech. It had launched a similar review of AstraZeneca. So PFE and BNTX are on deck pretty much, but I actually like BNTX at this point more than PFE. PFE is a slow stock, and they're not gonna benefit that much from this vaccine actually, but BNTX will, and the shares are sitting in overbought territory, so I would expect it to come down a little bit. I would not buy it at 85.50 where it's trading right now, 85.70 pre-market, like closer to $80. I think it's a good buy. Okay, so like I mentioned, Regeneron. So Regeneron looks good, and Regeneron, like I said before, in a recent video by President Trump, he praised their treatment and said that he felt better immediately after taking it. And on a separate note, Regeneron submitted emergency use authorization for their vaccine to FDA, and it could come free provided by U.S. government as free to patients. So Regeneron shares, in my opinion, is a buy at this point. They're not overbought or anything, and I think they're going higher. REGN, IPOC, Social Hedosophia Holdings. Okay, it's a So that's a special purpose acquisition company is taking a Medicare Advantage insurance provider, Clover Health, public through a merger deal valuing the company at $3.7 billion. Okay, I mentioned this because it could be an interesting spec buy, in my opinion. So it's actually trading in a reasonable range and could be an interesting buy. Okay, speaking of special purpose acquisition company, Helion. Okay, so Helion had a rough time after going public, like a week ago or so. Has been going down since then. It was trading as much as like $58, and since going public, it started to tank before it went public. But generally, people ask me about this, and I actually had a separate note on my channel, on Patreon channel, about Helion, explaining why shares are falling, and pretty much there's just too much supply of the stock, and they also upped the offering from 200 million to 250 million shares, and before it was 166 million shares. So more shares, and shareholders of Helion are selling, and warrants, people who bought warrants on Helion are selling, and actually people who bought Tortoise acquisition are panicking selling. On top of that are shorts, so that created a wave of selling with too much stock on hand, and before that could be cleared, the stock is going to be pressured. But in general, like at $29, I expect this to be in the range, market cap to trade in the range of 10 to 12 billion. And if you calculate this, 250 million shares, that's about at $30, that's about 7.5 billion. So it has a ways to go up, actually, and I wouldn't be shy to picking up shares at this point. And the company is good, the technology is good. I think it's a much better company than Nikola, for example. And I think their technology is real and fundamentals is very good. So it's pretty much a Nikola without baggage. So, the shares could be trading choppy and maybe even pressured, but I wouldn't be shy to pick up a little bit here and there of Helion, because eventually it will go higher once this extra supply clears. Okay, Levi Strauss. Okay, so that's a jeans company, reported earnings of 8 cents per share compared to expectations of 22 cents a loss. Revenue also beat, and strangely the shares went up a lot and then came down a lot immediately after it went up. So this stock is a pretty much slow moving stock, but I think the shares could move higher, and I think the earnings were pretty decent, and I think this could go to as high as $20 again. Okay, shares of airlines, UAL and AAPL and Delta and LUV and JetBlue. They're all trading a little bit higher because these stocks may benefit from President's call for standalone aid to the industry, and JetBlue also may benefited from the double upgrade from JP Morgan to overweight from underweight. So in general, airlines are certainly investable here, and I think the aid is coming, and I think it's a pretty good time to just pick up a little bit of shares of airlines. Okay, so shares of Google and Amazon and Facebook, they've been pressured a few days for the past few days, because they were all accused of abusing their market power in a new report from a House Judiciary Committee. The report calls for significant reform, but stops short of saying that the companies need to be broken up. So, and I would wait with these companies, because who knows what they're going to decide on a Judiciary Committee, and the shares, the stock chart doesn't look that good for Facebook, and doesn't look that good for Google to me, Google or Amazon. Amazon, I don't know. I mean, Amazon will still go higher, in my opinion, because it's Amazon. The fundamentals for this company is tremendous. But I would still wait for better prices for these companies because this they could be pressured in the next few days. Okay. Now, a lot of people ask me about, is it too late to buy solar companies like CSIQ and SPDR and RUN? Okay, these companies had a tremendous run, and but unfortunately they were sitting in a deep overbought territory. Deep, okay. So look at this. SPWR is sitting like RSI 82 or 86, 83, and I own SPWR and I own CSIQ, and if you own those companies, I wouldn't sell them because of the tax implications and because you can't time it, because it's very difficult to time it. But if I was a new shareholder, I wouldn't buy it at these heights. I would let it to come down a little bit, at least to like 15 handle for SPWR, and at least to CSIQ, at least to under $40 for a CSIQ. So hold on to these companies for now. I think they may come down a little bit because they are overbought a little bit, even though it's people are buying it as an expectation that Biden may win the election, and it would benefit those companies. But in general, they're too high. Wait it to come down if you want to buy it. Okay, DKNG. Okay, so DraftKings secondary offering took a wind right out of this stock. The shares were priced at $52, and that was not good news. But to be fair, I mean, the shares were trading very high at $64. I mean, the stock was overbought. I think it may come down and like around $50. I think it's a terrific buy. Tesla. Okay, so Tesla are trading higher after New Street upgraded the company's stock from neutral to buy and price target $578. I actually think that in general Tesla is a buy. Even here, Tesla is a buy, and I've been saying this a long time that it's a rule breaker, and it's not only an automotive company. It's like Musk said, it's a laptop on wheels. And they have so many things going for them, and a lot of analysts don't understand Tesla, and they're missing out. They're just missing out on the great potential of this stock and this company. Okay, TAP. Molson Coors Beverage. So Molson was upgraded by Guggenheim and named this stock as the best idea while reiterating buy rating. And I actually think that Molson is trading very low, TAP, and I think this could be picked up, and I think the shares may go higher. TAP. Okay. Oops. DPZ. Domino's Pizza. Okay, so Domino's Pizza reported earnings $2.49 per share, shy of $2.79 expected. Revenue beat, and comp store sales rose 17.5% versus 13.9%. I mean, generally the earnings were not that bad. The shares dropped like around 5% after the report because the earnings were shy of expectations, but in general revenue was higher, and I thought that the earnings were fine except for the actual earnings, and I actually think that closer to $400 could be a pretty good buy to me. Okay, MDT, Medtronic. Medtronic was upgraded to buy from hold by Stifel Financial, which expects positive change from the medical device maker's new CEO, Jeff Martha. Okay, so in general, I like Medtronic and how it looks on the chart, and I think the shares might go higher. And finally, Nikola. So Nikola shares are higher a little bit, and this company is seeking to rebuild investors' confidence ahead of November 30 expiration of lockups, according to Financial Times. And the electric truck maker is hoping that the technology it will present today at Mission Hydrogen Conference can change doubts, can make investors believe in this company more. And as you know, that there were basically a report by short seller Hindenburg Research, and that took the shares of Nikola down. But I wouldn't buy the shares at this point. I mean, even though the chart looks good, it's just scary to buy it because who knows what they're going to present. And, hopefully, they present good data, but I don't know. You have to be very risk tolerant to buy Nikola shares at this point. So I would wait and watch, and if they present good data, they present good technology, maybe it could be an interesting spec. But right now, I won't buy it before this event. Okay, that's it, guys. Don't forget to subscribe to my channel and click the like button, and I'll see you Monday.